Hey guys, Mike here. So, boy, what a crazy day in the market. Had some crazy news about Apple coming out of China, which absolutely decimated that stock. And of course, well, at least by Apple standards. And of course, as Apple goes, the stock market goes. Tesla got hit as well. I'll show you what happened to that one. And also understand there is something looming at you'll hear about it all month. You're starting to hear about it now. But there's a deadline for it, October 1st. I'll tell you about that. And how there's a good chance it may or may not affect the markets, but you need to be very aware of it. But I will start off with this right here. I think it's important to understand what's happening. And you're seeing when it comes to like non-farm payrolls, you can clearly see a decline, right? I mean, that's obvious as you can see it. But what's even more disturbing on this, and the reason why this is happening is the rate hikes is finally starting to take a hold or take effect. And one of our members was nice enough to share this, and it's the cleanest picture I can see of what you're seeing with non-farm payrolls and these revisions. And it's incredible. I mean, look at the changes they made to revise the report afterwards. It's not even close. Minus 45,000, minus 63,000, minus 104,000. On average, anywhere from 8 to 15% type revisions going on here. So they've revised them down 340,000 jobs right there. And again, if you need a picture on a decline, like this is a stock, you can see lower highs, lower lows being set since the beginning of the year right here. And so again, the QT is finally starting to take effect, as you saw with Roku today, who come out and they announced layoffs and the stock popped 10% and it's completely sold off after that. But they're going to lay off like 10% of their workforce and stuff. But, one thing that's remarkable about that is, I don't know how they calculate this stuff, honestly, because it's obvious the calculation is off, right? I mean, if you were at your job and you had to calculate something and you were that far off and they kept having to revise that much, you would be fired, right? Or maybe they give you a chance to fix your calculations. But I mean, that's a hot mess, right? And so, and obviously you're seeing this more and more and more. So we'll see what the next one comes up with, but we pretty much see the pattern, right? Which is they're going to revise it way down. So the job market is definitely looking soft out there. So it's something we got to keep an eye on for sure, because you'll have more job data coming out tomorrow. We'll see if more people were filing continuous jobless claims, initial jobless claims, all that fun stuff. But what happened today, the market was already tilting down, and then at 10 a.m., 9:45 to 10 a.m., you saw a dramatic downturn. And what happened was the ISM services data came out, and it came out hotter than expected. You see the business activity at 57.3. You see ISM services employment, 54.7. You see ISM services new orders, 57.5. ISM services PMI came in hotter. ISM services prices came in hotter. And the one thing you kept hearing was, oh, well, this means the Fed is going to have to sit there and raise and raise and raise, right? And then you look and really nothing changed. I mean, we're sitting here with 93% chance they're not going to raise at this month's meeting, which is still about 10 days out. And then you look in November, still got the majority saying no, 52% chance they're not going to do anything at all. And there's a 45% chance maybe they raise, right? What else took place? The dollar, right? I told you, you got to watch this dollar. And this is pretty beautiful because for the dollar, like this is a big move, right? It moves up. Got that retest of that trend line, that descending trend line, and then continues this bounce, okay? And remember, that's not good for earnings, okay? And when we pull out on a larger time frame, you can see right there, if this continues to run, it's going to get up in this gap right here, and absolutely the dollar could continue to run higher, which again is not going to be good for earnings, and some other stuff going on. And then you got the US 10-year, this one right here is coming right back up to that resistance line. Are we going to get another challenge? Is it going to finally break through this? Majority are sitting in the camp of saying no, no, no. Yields are going down. They've topped out. They may go up a little bit more, but for the most part, they have topped out. That's why you're seeing bets being placed on that. But again, if this breaks out, not going to be good, especially for the QQQ and its kind of stocks. But if it breaks down, it will be jet fuel. Okay, so just keep that in mind. And you might just see them kind of stay and float around this area until we get through September. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And I think that's just one thing you got to remember. We are in September, right? So it's going to be volatile. It's the worst month of the year. Again, like I said, Tom Lee's calling for it to be green. That don't mean it's going to be green the first week, right? We can go down 2%, up 3% the next week, down 2%, up 4% in the last week, whatever, leading into October. And ooh, we're green. So, I'm not expecting some smooth ride or anything, so just be ready. That's what August was, right? Sold off for 2 weeks. went up for 2 weeks, dang near finished at 0%, right? Almost flat. And I think we ended up at 1.2% down for the whole month. And so just keep that in mind. It's going to be a roller coaster, most likely. The stock market is very news sensitive right now as well. And so we'll see how it keeps going. The other one, and this is what I'm saying, what I'm about to tell you now could affect it news-wise. But as far as doing any damage or anything, that's a whole different story. And that's the federal government, once again, the people I love the most up in Washington. Here we go. They have to pass like 12 resolutions or something to keep us functioning. And it says right here, the senators return to Capitol Hill on Tuesday with just a few weeks before possible partial government shutdown, unless the Senate Democrat leaders and House Speaker McCarthy can broker a deal for a short-term budget extension by October 1st. All non-funded and non-essential government programs would halt. And you know me, I'm going to dig into this. So look, we've only had 3 shutdowns in the 21st century. The longest one in history was like under Trump right here. And we end up shutting down for 34 days. Look what the market did. It went up 10%. And mind you, this is when we come out of a 20% crash. We bottomed on Christmas Eve right here. So that could have something to do with that, but the market didn't care about the government shutting down for 34 days. Then we had one they did over the weekend right here. It's 3 days. Market didn't care. Ended up crashing like a week later or something like that. Then you end up with the last one in the 21st century in 2013. The market's like, oh, we're going to sell off. So they sold off. It still shut down for like 14 days, I believe it was. Ended up during those days green. And so the market tends to shrug these off. But again, we are in September. Okay. And you saw right there, I think there was one, none of them were in September. One was in October. One was in December. And the other one, real quick, was in January. So none of them were in September. Right. So as in what happened in August? It's like one of the worst months too. And what happened? We had like 3 different downgrades, okay, going into that month. So they used that to take advantage of. It would make sense if the market wants to be sensitive to it and give it a reason to sell off to set up for the fourth quarter. That absolutely, we could see the news cycle affecting this and stuff. But remember, it's non-essential stuff, right? Not like what we were going through when they're going to try to shut down the whole government. So we'll see if the market wants to shake it off and move up, or want to use it as an excuse to try to sell down the market. But I just wanted to see the chart to see the last 3 in the 21st century, and we had a whole bunch of them. The market just basically shrugged it off and stuff. Now, what can we shrug off? What's happening? We still got these freaking head and shoulders in play, man. I mean, that right shoulder was like it's forming pretty smooth right there. Again, it's not going to be a smooth ride, but still, you can look at what's happening. It's sitting on the 50. That's the S&P right here. So if it can hold the 50, get a bounce. MACD on the day looks like it wants to roll over and stay underneath the 0 line. On the hourly, looks like it's trying to curl up, maybe try to push it above the 0 line. Again, we'll see what happens if it get a bounce in that 50 or we start heading back down. Again, NASDAQ composite, same thing. It looks like a right shoulder is trying to form out right there. Here's the moving averages. We pull it up. It's setting on the 52. The charts look identical for these two right here. See, the MACD looks the same on the daily. MACD looks the same on the hourly, just like we showed in the S&P. All right, so we'll have to see in the short term what the market's going to do here. Again, you go over to IWM. Doesn't probably look like the smoothest head and shoulders out of all of them. You can see that right shoulder looks like it's forming as well. So again, these can all negate. Doesn't mean they're going to have to work out or anything else. Could be a fake out. No ifs, ands, or buts. That could absolutely happen. We'll just have to play out. If that one plays out, it actually brings us right into a demand zone down there around 170-ish. So we'll have to see how that works out. Now, understand, I love the manipulation in the market. And the Wells, they were buying puts this morning, driving the market down. And then they sold these puts right around like 1 to 130, somewhere in that time frame. They sold them, and that was about the bottom of the market for the day. That's when it started to recover. Now, what brought the market down big time was Apple, of course. And you can see, I told you it was on the daily here, it was getting up there, about to complete that gap fill. Boom, huge 4% down move. It actually recovered right at the end of the day to get below that 4% move. You can see it was just an onslaught, all day long. This takes till around 3:30 right here. And what happened was China come out with some crazy news. They're going to ban government officials from using iPhones, and not just iPhones, but any other device really that is not made in China is what it seemed to read to me. I could be wrong, but double check me on that. And so that kind of freaked people out. I was like, oh boy, because they're banning it there. Is this a first step to something else? Of course, the market loves to have an excuse to push something down. So that's why I pushed Apple down. It's the biggest weights. Of course, the market's going to go down. Now, Tesla got rejected off that 50. We said that 50 moving average is like a wall right there. You can see it just consolidating up for some bigger move, whether it be up or down. If you can break through the 50, you'll get the bigger move. If not, then we're going to move down. It also sits right there on that trend line we talked about. That's descending down right there. And that's where when we broke through, it was going to be bullish. When we came back down, it was not. But it used it as support today. And you can see what I'm talking about right there with the 50. Now, you look at the short-term channel up here, it made a nice recovery. Like I said, when they started selling those puts, market started moving up. But Tesla started recovering before that. Tesla started recovering right around 11 o'clock, just moving up in this channel. I'm going to extend this out to see if we actually stay in this channel or not. We'll have to see. But, again, we got that gap above. When we look, bringing up to 50 again, where the 50 moving average lies right now, it actually lies right above that gap right there. So if it completes it, the gap fill, it'll run back into the 50. So we'll see how tomorrow goes out. But that's what right now, that's what it has to get above. It has to get above the 50 moving average. After that, obviously 260-ish is definitely going to be some major resistance. But you saw this morning what happened to Tesla. And I didn't see any bad news or anything. They were just buying puts like crazy. And so when they started buying puts, obviously that moves Tesla down. So it's being moved by that. Oh, some good news actually was the IRS officially lists the Tesla Model X as eligible for the full 7,500 EV credit. And when you look on here, I think every one of the cars actually qualify for this. Now, there is an income part to this, so got to keep that in mind as well. But it's not bearish if your cars actually are eligible for a credit requirement. So I thought that was decent, but I didn't see any really crazy news about Tesla. Let me know if you did. Now, Google, watch this one because it's hanging for a dear life on that trend line right there for support. And when we pull out here, you can see, if we go on a larger scale, you can see this rising wedge right here, right? That's run to at the top and bounced off of it today. So maybe it would make sense after this nice run for Google, just to make sure you understand what could happen here, for it to absolutely pull down to the bottom of that wedge right there. If it breaks down, fill that gap, and that'll be around 130. That's where it would find support, so not too bad. So keep that in mind, but that's really why you saw a sell off there. And also, if you look down at the bottom, bearish divergence on the RSI has been there for a while, same way it has in NVIDIA, to keep setting lower highs. But again, doesn't seem to affect it just yet. And this is one of those, it's an AI play, right? So AI keeps holding it up and stuff. And so we'll see what happens tomorrow on this. Again, I can't reiterate enough. It's September. You're going to see plenty of shenanigans played out, plenty of different news coming out where the market's going to move up and down and stuff. And when it comes to earnings, obviously we have some after hours. The only one I can really look at tomorrow, anybody's going to pay attention to, is probably DocuSign, maybe RH as well. But really, that's as far as earnings goes. And Friday, I wouldn't even pay attention. But when it comes to economic data, a whole different story. You're going to have continuous jobless claims, which they actually expect them to go down, which is kind of weird. Initial jobless claims, they expect a small tick up. Then you'll have non-farm productivity. And then a lot of oil and natural gas data, if you like to follow that. And then at the end of the day, you'll have some Fed speakers, which I find it kind of interesting. They're holding the Fed speakers to the end of the day instead of having them speak while really the market's going on and stuff during in the morning and mid-afternoon. So that's kind of interesting. But, right now, again, the news is somewhat driving the market. The seasonality is somewhat driving the market and stuff like that. So it's just certain key levels, like 4,500 is the key level right there on the S&P. That people are looking at and stuff. With Tesla, you have certain key levels they're watching out for. And you can see it wants to hold up. The bulls and bears are fighting it out right there. But options are just driving it, right? Like a pinball right now. And we'll see. Watch for Apple. If Apple recovers tomorrow, obviously you're going to see a pop in the market. We'll have to see what's going on with this whole China news and stuff like that. No surprise there. That's the things you can't predict, right? Is that kind of stuff coming out of China. Could just be they're getting back at us for something. Who knows? Again, I didn't see any news, so if you did, please share it, and I'll share it with everybody else, okay? So if you got anything out of this, please hit that like and subscribe button. I got a lot more data for you tomorrow I want you to see, which is pretty stunning, actually. I admit, when I saw it today, I was like, oh, good Lord. It's just amazing to see some of these numbers coming out and stuff. And like I said, the fact the market's held up as good as it has with all this stuff coming out, I don't know. It's either good or bad. We'll have to see, but let me know what you think in the comments. So anyway, see you guys tomorrow. Have a great night.